The Apartment Gurus podcast is brought to you by Greenlight Equity Group, an apartment acquisitions and holdings firm co-founded by Carl York and Tate Siemer, host of this show. We offer you the opportunity to be an owner of cash-flowing, wealth-growing apartments without the headaches of being a landlord. These assets are recession-resistant, risk-mitigated, offer significant tax advantages, and are a great alternative to the stock market. Ready to check it out? Go to www.investwithgreenlight.com today to book a personal consultation with Carl or Tate. Again, that's investwithgreenlight.com. We look forward to meeting you. Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back to another episode of your Apartment Gurus podcast. Never called it yours before, but it really is yours. If you're tuning in and digging into what we have to offer, twice a week on the show, this is your show, and I make it for you guys, and I make it because I love it. Do it because I love it, but I also do it. Part of what I love is being able to contribute and motivate and inspire and educate you guys and really help you get to the next level. As many of you know, I'm a huge proponent of paid coaching and paid masterminds. And for those of you that don't know what a mastermind is, I look it up. I do some research on it, but I believe it was Napoleon Hill coined the term mastermind, and it's kind of like a group think, like a think tank, if you will, of people that are all in the same business, and in our case, obviously, it would be multifamily investing. Basically, you're surrounded by really high level entrepreneurs, typically that are up to doing big things. And the networking opportunity is tremendous in most masterminds. And many of you know I have my own little mastermind, which when I say little, I love that it's little. It's gives us a lot of opportunity to help everybody at a really high level, and for me to be really involved. But my guest, Mr. Tim Little, who's on the show with us today, zooming in from Tampa, Florida. He and I are in another mastermind together, quite a big one. 400 plus members, all on capital raising. It's a capital raising mastermind, and the value of just that network alone. You're talking, I don't know, Tim, what would you say? Certainly, there's definitely billions of dollars of net worth in that group, high level Absolutely. Capital raisers. Yeah. So Tim and I have networked and met through this group. And the whole adage that I'm sure you all have heard a lot by now, either on this show or elsewhere, is that your network is your net worth. And for me, what that means is your ability to get anything done in the commercial real estate investing space is available to you in your network. Ideally, right? If you have a good, robust network that you have great relationships inside of. And before we kind of dig in, I just love to get, what your overall impressions. You've been in our group. It's called RaiseMasters. You've been in our group for about twice as long as I have, honestly. I joined in January. And so I'd be curious to get your thoughts. But to me, the value level of just about every aspect of the deliverables in this mastermind, whether it's the online video curriculum, the daily coaching calls with high level investors and coaches, and the Slack channel where you get to communicate with 420 or whatever other capital raisers and find deals and advertise deals. It's one of these things that if you take the ball and run with it, you'll 10x that tuition, whatever he's trying. I don't even know what he's charging now, but you'll 10x the annual tuition in ideally a matter of months, 6 months, something like that. Just by getting your first deal done or your next deal done. So anyway, I'm just obviously kind of blown away, to be quite honest, with our experience so far. And even with as busy as I've been, not being able to take full advantage of all the meetings and whatnot, we've just made some incredible connections. What's your experience been like that in RaiseMasters, Tim, so far?
Yeah. And so, my big adage, I guess, that I try to live by is if you're the smartest guy in the room, then you're in the wrong room.
Yeah.
And that's what I found with RaiseMasters, right? Any of these forums, whether it's the, monthly meetings or the weekly meetings, with the experts that we have, I'm able to get into a room where I'm probably not the most knowledgeable one on the topic being discussed. And that's valuable to me. That's not a detriment. That's something, because that's an opportunity for me to learn. And having, I think access is the big selling point of this or any mastermind, really. And in some, it's just one guy at the top, right? And maybe you have access to that guy or girl, maybe you don't. But right. Here, they've grown it out with such talent and such successful people that we're able to have these meetings so often that we're able to ask questions of experts all the time.
Yeah.
And that's a huge difference from what I've seen from other programs.
Yeah. Yeah. I mean, yeah. And I think if I'm not mistaken, you're talking about the daily coaching calls, amongst other things, I'm sure. But yeah, I mean, these daily coaching calls are hour-long Zoom calls with guys that have hundreds and hundreds and hundreds of millions of dollars worth of property. I think at least one of them is over $1 billion. And these are guys that have raised hundreds and hundreds of millions of dollars. And so the amount of experience, knowledge, wisdom, everything that they have to bring is tremendous. And the format's very loose. Like, you can show up in those meetings, and a lot of times, maybe there's 8 people there or 15 people there, whatever. They're not necessarily super crowded. And if you have something that you want to have addressed, a question, a problem, a brainstorm. I talked with Brian Spear, who's one of the coaches, for 45 minutes about our website one day. And he just kind of critiqued the heck out of it. And, just so high level, and so valuable, just in and of itself. And then you look at the actual partnering opportunities that you can find there, and whether you're strictly raising capital, whether you're out finding deals, or sponsoring deals, whatever role you want to play, there's opportunities every day on the Slack channel that come up. And again, for listeners, this is a capital raising specific mastermind. So you want to be sure that's either going to be your main thing or your only thing, or it's going to be a big part of your business, right? And in our case at Greenlight, we have been very good and kind of cut our teeth on the acquisition side, right? The deal finding, deal making, structuring, negotiation, due diligence, getting everything put together, the loan, and the capital raising thing for us was something that kind of came secondary as we just scaled up and got more and more deals. And so joining RaiseMasters was just an absolute no-brainer for us, because we really have a lot of opportunity to up our game and meet great people that we can partner with. So So definitely not an intentional plug for RaiseMasters in this case. Hopefully, maybe Hunter Thompson, our fearless leader, will hear this someday, or somebody. We'll definitely post it and make sure everybody hears it, Tim. But again, to me, just speaks so compellingly to the massive value of masterminds. Particularly, you want to be in paid masterminds, and usually they're not cheap, and it's an investment in yourself. It's an investment in your business that you should 10x, 20x, whatever, over the next year or two. So on that, Tim, I want to know all about you. Like, I know a number of things about you. You're up to right around 500 multifamily units in your portfolio, and you started with a fair amount of college debt and dug yourself out of that largely through real estate. And I want to hear all about that story, and kind of how you made all that happen, and then really curious about like what you're doing today. And by the way, for listeners, Tim is the CEO of did you say ZANA or ZANA? ZANA. Okay. So ZANA Investments, which is really cool. It's a combination of his two daughters' names, which are Zara and Lana. So ZANA, I love that. That's really cool. And again, based in Tampa. So fill us in, Tim. Give us the full spiel on Tim Little, and your story, and how you got to where you are, and what makes you tick.
Sure. And first, thanks for having me on. I'm honored and humbled after seeing some of the guests you've had on here. You had some pretty big players, so it's nice to be in such company. Most of my background is military, actually. Went in straight out of high school. A month after graduating, I was at basic training. Did a couple of years in, and was like, no, this isn't for me. I'm not going to be a lifer. Going to get out. And then went to college because I was ready to have a real college experience after 2 years in the military. Got that out of my system at Florida State. But while I was there, an ROTC recruiter got to me and was like, how does the prospect of a guaranteed job after graduation sound to you? And I was like, okay, that doesn't sound too bad. So wound up going back into the military, this time as an officer, once I graduated college, my undergrad, and was in for about 5 years, a little over 5 years during all the Iraq, Afghanistan time. Yeah, had a couple of combat deployments, all that stuff, and was ready to take a knee at around 2008 and go back to school, actually. So got out, went to grad school, was ready to do big things. Initially planned on doing more like international studies, State Department, that kind of thing, and then shifted my eye towards business and the international business aspect. So came out of grad school, and you got to remember the time frame that we're talking about. I started grad school I started grad school in like 2008, came out in 2011, and I was going to graduate in 2010, but the job market was still pretty bad. Yeah. Even then, like things were recovering, but it wasn't looking pretty, and I did not have a whole lot of prospects. So that's when I decided to stay in one more year and do a dual degree MBA program. For one more year, I was able to get my, international MBA, and I was like, figured I'd be a lot more marketable with that. And so that's what I did. So 2011 came out of there and wound up doing, government consulting because I had a clearance and all that stuff. But at the same time, I came out of grad school with about $130,000 in school debt because I wound up going to a private school and was like, YOLO, this is where I want to go. I don't care. I'll figure it out later. And, by the way, I'm not going to work while I'm in grad school because I want to focus on my studies this time. Because in undergrad, it was more about fun, and I was working the whole time I was in undergrad. So I wanted to take a more studious approach. While I was in grad school. And so that's how I wound up with that debt. And that was a real eye opener once I came to the realization and had to start paying up. But really the first thing I did was just say, okay, I need to have a plan, because I'm not going to let this just hang over my head like the dark cloud that it was.
Right.
So the first thing I did was consolidate those loans, because they were all over the place, 5%, 7%, 8%. And we're talking, $20,000, $30,000 each for some of these loans. Right. So I was able to consolidate them into like a 5% APR, one that made it a lot easier, made it lower interest. So I was only paying one loan. And then I just started paying it aggressively and living below my means. I was living in DC, not the cheapest area in the world, but I bought in a pretty cheap area downtown where other people were not willing to live.
Okay.
Right. So the other side of the river, and people were just scared to move there. But, I was pretty confident. I also had a 90-pound Doberman, so that didn't hurt either.
And military skills and background and all that stuff too, right?
Right. I could kill someone with my bare hands with a pen. No,
right.
No. And so we were able to get into a neighborhood where we were pretty confident we would see appreciation if we stuck it out for a few years, right?
Cool. Yeah.
And you could do that while you're young, before you have kids and stuff like that. But at the same time, I also wanted to get into real estate and start investing. Mm-hmm. And that was hard to do when you're, paying off these loans, because I was paying about $1,500 a month towards my school loans. And, for a lot of people, at least back then, that was a mortgage.
Right.
I wanted to pay them down aggressively. But at the same time again, since I was living below my means, I was able to put a little bit of money aside and, did the whole Rich Dad, Poor Dad, reading it for the second time and ready to take action at this point. And so I was like, all right, I'm going to buy a property. After listening to a bunch of podcasts, all this stuff, I was like, I have to just do something instead of just listening and learning.
What year was this?
So this was 2014.
Okay. So it's so amazing to think how different things were back then, as far as like available education, thought leadership, podcasts. I think Bigger Pockets was around back then, if I'm not mistaken.
Right. And that's what I got started on besides just books. A Bigger Pocket was the only real thing out there.
I can't wait to hear the rest of this, but I just want to rewind for a sec. You kind of glossed over, you'd always wanted to invest in real estate, or it was something you were wanting to do. What was the genesis of that? What was your inspiration with that?
Yeah. So while I was still active duty, I'd say about 2004, right? Like I went to a conference, and it was one of these just guru filled in the bad way kind guys just pitching stuff. And there was one who was doing like investing in like single family homes, and it was a CD set. And so I got conned into buying this CD set for, I don't know, $600 or something,
right?
And it talks about driving for dollars and talking to little old ladies who just lost their husband and how you're helping them by taking their properties and all that stuff. And I was like,
hate that game. Yeah.
And I was like, I get it. And then I wound up getting deployed like within 6 months when I was gone on that deployment for 15 months. So it's that whole life got in the way, and I never had time to institute any of that stuff. But it was probably for the better, because again, the times I would have been buying would have been like, 2005, 2006, leading right up to the top and my downfall had I actually gotten in. And so, I'll call it lucky.
Yeah, sure. And you very well may have been, right? And then, so when did you kind of reignite into real estate?
Yeah. And so it really happened like after grad school, because when I was in grad school, I was broke, right? So if you don't have any money, you don't worry about investing. Some people do, and they get really creative. I was not that creative, and I was just like, well, I don't have any money, so what do I do?
Right.
But once I actually started getting a nice little paycheck, then I was like, all right, I got something I could tuck away to the side. Now I want to make it grow.
Mm-hmm.
So how do I do that? And then I went back to, real estate, what I remembered about that. Maybe I wasn't going to play the same game. And then I read Rich Dad, Poor Dad for the second time, this time 10 years later, when I'm in a very different spot in my life and my mindset.
Mm-hmm.
And that's when I was able to kind of rekindle it, but commit to action.
Yeah. Rich Dad, Poor Dad. Like, it seems like probably it comes up like every fourth, fifth episode with, with all of us that have usually it's an old enough book, but such a powerful book that, especially some of us that have, been around for, let's say, longer than 3-5 years, like it's almost a part of everybody's background. And it's such a paradigm shifter when it comes to investing and, what to do with money, how to grow wealth, how to be an owner, all of that stuff. And it's cool that it kind of almost spoke to you twice at two different points in your life.
Yeah. And it's really simple concepts when it's boiled down, right? Like, hey, own assets, not liabilities.
Right.
Things that make you money, not take away money. And it's like, oh, wow, that makes a lot of sense.
Yeah. Yeah.
And so that's when I committed myself to, and the other thing I committed myself to was getting multifamily, not single family. After looking at it, I really didn't want to have a single family and grow that empire. So I was like, even if I got to start small with like a duplex, that's what I'm going to do. Because, I'm going to reduce the risk associated. I'd rather have 50% occupancy than 0% occupancy. And it's only 100 or 0 when you have a single family.
Right.
So you're at least reducing that risk with a duplex. So went down to Richmond, since that was an area that I, could feasibly afford something, but it was still within driving distance. Looked at like 5 or 6 duplexes in one weekend and, just made a weekend of it, seeing Richmond, seeing all these properties, and found one that I was willing to put an offer in and wound up getting it. And so that was my first property, $85,000 for a duplex in northern Richmond that was probably 100 years old. It was just one of these big houses that they divided between the top floor and the bottom floor, and they just sealed off the stairs. So
right.
That was the first one.
And sorry, what'd you say the cost was on that? I just want to make sure I heard that right.
85,000.
Yeah, I mean, do you still own it?
It sounds unbelievable now, I know, but
I know it is unbelievable. It's insane. You look at, I mean, I know Richmond's a healthy market. You look at Salt Lake between 5 years ago and now, like it's unreal. Do you still own that property?
I don't. I sold it in 2018, I believe, for $150.
So you double your money essentially, in what, a year or two? Essentially.
So it was a couple of years. So it was a little less than 4 years, I think. But again, considering what I put into it, and I was cash flowing generally the whole time I had it. So that's the other side. My goal was, I think it was $100 per door per month, even after the 10% property management fee. So it's not like I was losing money along the way either. And also he bought it without a contingency for inspection. So as you can imagine, with a house that old, that was worth its weight in gold right there. So I was like, all right, let's do this. And then I wound up doing a 1031 exchange. Yeah. So I wound up avoiding or deferring, I guess is the correct term, the taxes anyways, and just rolling that into a triplex here in the Tampa Bay area. So
I don't want to jump too far ahead in your story, but now that now that you're into 500 units, how many properties are in that 500 unit portfolio? What's the average size of the property?
So average size is between like 100 and 150, but we did just close on a 236 unit apartment like 2 weeks ago. And
awesome.
Granted, it's, when we talk about these numbers, people have to keep in mind it's maybe a very small slice of a very big pie, but that's okay with me, right?
Right.
You're building out that pipeline, and over the years, that pipeline will start to pay itself once you start exiting on these deals, 3, 5, 7 years down the road.
Yeah. And are these GP positions or LP positions in these deals?
These are all GP positions. Yeah. So we usually co-GP with others, come in, help them with either boots on the ground, raising capital, etc.
Got it.
Me and my partners, we'd like to find our own deal and be the one, the prime, as it's called, be in charge of the deal. That way we control the terms. Yeah. But as everyone knows, it's hard to find the deals that pencil out and be the first ones to offer on it. So in the meantime, we're willing to partner with others. Yeah.
Cool. And again, another cliche from the show that you hear all the time, but this is a team sport. And it sounds like you have a partner that you kind of do a lot with, like a kind of a regular partner. Is that true?
Yeah. So it's a small group of us. And what we do is we basically retain our individual brands, like on ZANA Investments, And so there's like 5 of us. We retain our individual brands, but when we co-GP on a deal with someone else, we'll form an entity, the Admirable Group, right? Because that way because we're pretty small and we're relatively new at capital raising, but we're able to negotiate terms if we come as a group and say, hey, we can raise 1.5 million for your deal. And they're like, okay, well then we'll bring you on as a co-GP. Whereas if I came and I was like, hey, I can raise 200,000 for your deal, they're like, okay, that doesn't help much. Right. So it would be that much harder to get into a deal. And so that's why we do it that way.
So, okay. I love that. There's so many questions I've got here and so many takeaways. The first one is the reason I was asking you and kind of jumping ahead to talking about your current portfolio is, between that first duplex and where you are now is, what a journey, right? And we'll talk more about that. But I guess just kind of a simple question for you. There's kind of this overall general school of thought in the space that you got to start small and work your way up, right? And I mean, you started about as small as you could. Obviously, you could have gone single family, but a duplex. My first property was a duplex, and then I did about 40 or 50 single families. So I know this space very well. But I'm just always curious. I've kind of got my own thoughts on this, but what your thoughts are around, is it a myth that you got to start small and build up? Can looking back, knowing what you know now, how would you maybe do things differently, or how would you coach somebody else to do things differently?
Yeah, I think there's pluses and minuses of each way, right? So I certainly did start small, and I did what I would call the baby steps to go up each level. But there are certain advantages that I gained from that. Yep. But there's also advantages of speed and scale if I would have went a different way. So it's really depending on how you look at it. So like for my case, an example, like I did that duplex, right? But I was still continuing to educate myself and learn about different asset classes. Yeah. And then I discovered, like many people do, like, oh, there's this syndication thing that, I've never heard of. And it's like somebody opens the curtain and they're like, there's this thing too. And you never knew it existed until you do. And so then I was like, okay, that's interesting. And I was running up against the issue of scale with small multifamilies. I was like, okay, so I'm going to need 50 duplexes to replace my income. I was like, that just doesn't seem feasible. Right. So let me start looking at these alternatives. And so I went to like I think it was a Brad Sumrock event in Texas. Was my first multifamily introduction. And it was like drinking from the fire hose, right? Right. But I was like, okay, all right. No, this all makes sense. And so then I was like, well, let me go ahead, because I knew I wouldn't have time to, do a program that they're trying to pitch me for $20,000, $25,000, whatever. And I was Coaching, yeah. because I don't think I was ready for that yet anyways, because I didn't understand it enough.
Right.
And I was like, so let me at least go ahead and try to be an LP on a deal, limited partner, and passively invest, because that way, not only am I earning more money, presumably, but I'm also educating myself because I'm able to ask the questions that I want to ask of that sponsor. Yep. So this is circa 2017. That's exactly what I did. I found a sponsor, and you may know one of them, Reed Goosens.
Yep.
And I invested in one of his earlier deals in San Antonio. And like I said, he was very accommodating, answered all my questions patiently, even though some of them were stupid. And I was like, okay, I'm comfortable enough to put my money in. And I only put, I say only, in air quotes for those who can't see it, $25,000. But that was a lot of money to me.
Sure.
Right. In terms of liquid cash that I had, it was kind of all of it.
Yeah.
So for me, that's a huge amount of trust, but I wanted to see if it worked. And so I invested that money, and then I wound up going on a deployment like a month later. So I was going to be gone for 9 months anyways. And I'd say, what is it? 6 months, 9 months later, when I got that first distribution check, I was like, okay, this is a real thing. I'm not going to be on the next episode of American Greed. And I was like, that's when the light bulb kind of went off. It was the proof of concept that I needed to say, hey, maybe I can do this too. Yeah. And it just kind of leads you down these different paths. And that's how I found myself getting interested in more the general partner, the active side of syndications.
Yeah. Again, just dude, this is so rich. Your story and the things you did and the different steps that led to your success and scaling up. But I just want to throw the Brad Sumrock event out there. I've actually never been to one of his. I know of Brad. I don't know him personally, but I know he's a big player and he's legit, and I'm sure he's a terrific guy. And I know that he's had a lot of impact in this space. And I will just say that, to me, there's 3 national conferences now that in my book and I'm sure there's others that are great, but there's 3 for me that are just do not misses. And if you guys want to email me, Tate@glequitygroup.com, I'll send you a list of those conferences, where they are, when they are, and in some other stuff too, recommended resources and whatnot. But to me, they're just game changing, man. Those conferences, for you, like you said, drinking from a fire hose, you go and you're in a 2 or 3 day event that are all day, and you're hearing high level speakers talk about all the different aspects of the business. And then you're networking like crazy and meeting people that are doing amazing things, and it elevates you, man. If you give yourself to really like bringing it to those conferences, and I don't mean like putting tons of pressure on yourself to meet everybody, but like just really like authentically connecting with people and going for the big takeaways out of some of these speakers. Like there's been a few really, really critical parts of our growth and our development. And I would say kind of our regular attendance of some of the critical national conferences that are out there has been a huge part of it for us.
Yeah, so, absolutely. And then in terms of like my first GP deal, it was the same kind of thing, right? I went to a Rod Cleef event here in Tampa. So I was like, hey, it's right down the street. Why wouldn't I go?
Right. And Rod's great. Rod's awesome.
Right. And they all bring a different vibe, different value. I think Rod's is more the mental piece,
mindset.
Mindset. Yeah. Getting yourself in the right mindset. So, me and a bunch of other guys came out of that thing pumped, like, let's do this. Like we were all about it. Let's get a deal done. Let's do our first GP deal.
Nice.
And so that's how I got into my first GP deal, was by meeting those people that were at that same conference They all wanted to do a deal. They were scrappy, right? And so they were able to find a 59 unit portfolio here in Tampa, and they were raising for it, but they needed more capital. And they came to me asking if I wanted to be an LP in the deal. And I was like, thanks, but no thanks. Like I want to be a GP on a deal. So I'm going to save my capital. So
Sure.
for that, so that I can
Right.
contribute to my own deal. They're like, okay, but then a couple months later, when they're getting close to closing time, they're like, hey, you still got that capital you're looking to invest? And I was like, yes, I do. And they're like, hey, we're willing to bring you on as a GP if you bring that capital and,
Cool.
do some work with us. Again, I was in Tampa, so I could be boots on the ground.
Right.
I helped them out with stuff at, working with the city, combining plots, stuff like this. So I put the work in, but, I've also brought some capital to the table. And again, small slice, but that's okay. I wasn't concerned with how big the slice was. I was concerned about getting the experience and the legitimacy of getting into a deal as a general partner.
As a GP, so key. Yeah, that's such a valuable, a few very valuable things there. Tim Bratz I was in his mastermind which is a big mastermind that's very powerful, not multifamily specific, but more like kind of general entrepreneurial, a lot of real estate folks in there.
Mm-hmm.
But Tim is a multifamily guy and made his mark in the world putting together a really impressive portfolio. And his way of saying this is that he'd rather have a slice of a watermelon than all of a grape. Right.
Yeah.
And so that's kind of like looking at a single family deal versus looking at 100 unit deal that you sink, in your case, 25 grand into. Most standard minimums these days are, 50-ish. You hear that a lot as far as a minimum passive investment in a syndication. But speaking for this syndicator, like if somebody really wants in a deal, especially if they want to grow in the business, they want to learn from us. I'm kind of a natural teacher and coach. And so I love bringing people in that role because amongst other things, it's not totally selfless. Like we could end up partnering together and on future deals and, helping you build your career, et cetera. So and this has been said in other episodes, but this is really, really key, guys. Being an LP in a syndication deal with somebody that you have a rapport with, that you trust. Obviously you want to know, like, and trust them, right? And that they are able to show some sort of commitment level to you to keep you in the loop and invest in you learning what is all going on even on the GP side. To me, that's a wonderful first step. If you have 25, 50 grand, getting on an LP, look, you're already building your track record, you're building your knowledge and wisdom base by leaps and bounds because you're doing it rather than reading about it or listening to a podcast about it. And then the other thing I would just add is you took it a step further, Tim, with getting onto a GP, and our standard is $500,000 threshold to get onto our GPs, but we've certainly broken that threshold for people that we like and want to be a part of our team and have other reasons to want them on the team rather than just the dollar amount they can bring. So, everything's negotiable, right? And this is such a relationship game that you build the right trust and rapport with the key people that can really help you move along. And it's just a wonderful way to get into the business.
Yeah. And the only thing I add to that, Tate, is like, if you're thinking about being an active investor, right, then you really want to consider being a limited partner, an LP first, because it gives you that perspective, the perspective of the passive investor, you really can appreciate their wants, needs, desires, and concerns if you've been in their shoes. So that empathy piece really comes into play if you've been that limited partner first and then transition over to the GP side.
That is an excellent point. That's to my recollection, never been made on the show before. Understanding, investor relations for many of you as you develop your portfolio and your business is going to be a massive part of your business and your daily activities. And to some degree, to a large degree, you own a marketing company. You're marketing yourselves, your brand, and the opportunities that you have to offer. And to have the other side, to be on the other side of the equation, like you just said, Tim, and understanding what the experience of being a limited partner or a passive investor, basically synonymous terms, to understand that role from having done it, it gives you so much value that you can offer on the GP side. Once you're a GP, that's a great point. Really, really good point. I like it.
Yeah. Yeah. And, I don't want to leave your audiences in suspense with some of the other stuff that I brought up before about the debt, but that was paid off in 2016 when I moved from Washington, D.C., because I had, I was paying it so aggressively that I brought it down to like $83,000. And when I sold my house in D.C., we made about $85,000 free and clear on it. And I literally just wrote a check for $83,000 so that I could be rid of that. And, I've talked to people about, well, was that the best decision, when you could have put that money towards investments, this and that. But you have to take into account, where you are in your life too, right? Yeah. I had just had my first child and all this stuff. So the priorities were different. Getting rid of that debt and just the peace of mind that came with making it disappear was totally worth it and allowed me to focus on my investing after that. So I think it paid huge dividends just in terms of, we talked about mindset earlier, allowing me to go forward and to be, arguably aggressive in my investing after that point. Yeah.
Yeah. So well said. Want to be obviously respectful of your time. And there's just so many different things like I'd love to explore with you. But let's talk real quick about what you're doing now. What your activity is, what your buy box is, if you could wave a magic wand question, if you could kind of like wave a magic wand and have a really awesome, compelling deal that's kind of right in your wheelhouse come along, what would that look like at this point?
Yeah. So I'd say like the people that I'm trying to help the most are military veterans like myself. Maybe they've done 20 years in and they're on to their second career. So now they have a little bit of disposable cash, and they probably have 2 or 3 single family properties that they've kind of accrued over the years as they've done their PCS moves from one place to another. And they're caught in what I call the landlord trap, right? Maybe those properties are still working for them. Maybe they're not, but they're looking for something a little more passive. And they don't want to have to deal with it, but they want all the same benefits of real estate. And so, we're able to present passively investing in syndications as a way to solve that problem. Mm-hmm. And the deals that I'm looking at, originally it was just, class B multifamily value adds between 100 and 150 units. But obviously things have changed a bit in the past year and a half.
Just a bit. Yeah.
Yeah. And so now that equation is adjusting accordingly, and deals that I'm looking out for as I'm scanning my inbox are deals that say, seller financing, right? Right. And this deal that we just got in Decatur, which is in the Atlanta MSA, really love Atlanta as a market, by the way. It's continued to grow, and I don't think it's too frothy like some of the other markets out there, but it had an assumable loan at 3.5% interest rate, for years to come, and even had some IO left on it, interest only left on it. So that is amazing, and something that is really hard to find, but I think is also attractive to the passive investors because they see that as mitigating some of the risk associated with lending out there. So that's the kind of stuff I'm certainly keeping my eye out for.
Yeah. Yeah. Is Atlanta like a primary market for you, or are you more market agnostic? How are you with that?
Yeah. So I'd say in between, right? So it's mostly Sunbelt. We have properties in Dallas and in Atlanta and Tallahassee. Okay. But so we like to stay in the Florida, Georgia, Texas. I don't know that we're opposed to other states, but it has to make sense. And, looking at landlord friendly growth markets, stuff like that, looking at the fundamentals to make sure that those are still strong. Yeah. Yeah.
And to switch gears completely one more time here, while we still have a few minutes, talk to me about your capital raising game, your retail investor, so I hear people call it your flywheel, like your click magnet funnel, CRM, auto drip, all that stuff. Obviously all that stuff is heavily focused on in RaiseMasters. After having been in RaiseMasters for a year plus, it was a year, right? It wasn't 2 years yet.
No, I just started my second year.
Just started your second year. Yeah. So talk to me a little bit about that and your ability to, it sounds like even raise money, raise capital for other people's deals sometimes.
Yeah. And so I had to, like everyone who went into RaiseMasters, or just do kind of like take a step back and look at my processes and, my whole system, and kind of evaluate it. And I saw that the back end, my active campaign, my, CRM, where I really needed to get that stronger, because I didn't want to be bringing leads in, but having them die on the vine, as it were. And I think that's kind of what was happening, because I had like what I guess you can call nurture sequences, but they were built by me, and they probably weren't great. And there wasn't scoring and other things that kind of continue to prompt people to stay engaged, right? It was, okay, after email number 3, I never talk to them again unless they, open my monthly email. But then I started to realize how important it was to have consistent touches, to be front of mind with investors, because otherwise they'll forget about you. Yeah. And I get that. I get emails too. So we redid the whole back end. Jason, I'm sure Jason.
I was wondering if you had used Jason. I'm actually kind of chomping at the bit to hire him, honestly. Yeah. Yeah.
And so I decided to do that first to kind of have the foundation set. And so that's where I am right now. I mean, because it took me a little while to bite the bullet on it. But and so now I'm looking at top of funnel, getting people to come in so that I can help them. And so that's where the lead magnets and stuff come in. And so, for one lead magnet that I have right now is, and obviously available to all your listeners, is the Passive Investor Cheat Sheet. And what that basically is it's a dictionary of the top 33 terms that passive investors need to understand in order to be confident investors. Because what I found is there is a whole lot of jargon and terminology coming into this world that seems exclusive. It's like it's almost meant to keep you out and prevent you from understanding. Yeah. And so what I did is I took the words that I found the most useful and were being used most often, and explain them in plain English with, examples. That way someone could read it and be like, oh, that's what it means, and really understand it. So it's a nice clickable PDF. They can click on a word, see the definitions. And then I got some other resources in there, like links to my blogs that go into further explanation and stuff. But people can get that by going to ZANAinvestments.com/cheat sheet. And then I'm sure you'll have the link in your show notes as well.
Yeah, we sure will. And but again, for those of you that are listening, it's ZANA, right? ZANA, right?
Yep.
Yeah. So ZANAinvestments.com.
Yep.
Yep.
/cheat sheet.
Yep. Okay, perfect. So there you go, listeners, ZANAinvestments.com. And that's where you can download that cheat sheet, which I think is a fantastic idea. And you're right, there is a little bit of a language that you got to learn. I think it's very learnable and it's pretty intuitive. Like once you kind of start just having the conversations, but something like that is very helpful. Any other way of people reaching out to you, Tim, and kind of connecting and being in your network, so to speak?
Yeah, absolutely. I mean, people can always reach me directly, tim@zanainvestments.com, or they can check me out on LinkedIn. I try to stay pretty active on there. So please, follow, connect with me. And then I have a podcast as well called Journey to Multifamily Millions. So if people listen to podcasts, which I'm assuming your listeners do, then they can check that out as well.
Yep. There you go, guys. So Journey to Multifamily Millions. If I have anything to say about it, I'll hopefully be a guest on there one day. So keep your eyes peeled for me. I'm being a little assuming there, Tim, for sure.
No, absolutely.
But it's been just a really, let me just one more line of question here. What's next for you? Like, where do you see this headed?
Well, I mean, and like I said, we've had to adjust some things just with the changing markets.
Yeah.
But I don't think we're going to change what we're doing. We're going to continue to, try to help people diversify away from the stock market and into these other investments that I would argue are better, less volatile, and have better tax advantages, because a lot of people just don't know about it. So we're going to continue to do that. The challenging part is always finding those deals. So we're going to continue to underwrite. I just toured a property yesterday, a 90 unit here in Tampa. And that's what it's all about. Just hitting the ground until you find something that works for you and your investors.
You find the deal flow more challenging, less challenging than the capital raise side?
I think both are challenging.
Yeah.
It's just you have to keep doing it, right? Like if you have a team and we have like a couple of folks who like to do underwriting, and that's their jam, right?
Yeah.
So others of us will see properties in our email, do a cursory look at it and say, does this even make sense for our buy box, like you said? And if it does, then we'll pass it to them and say, hey, can you do a quick down and dirty underwriting to see if it's even worth putting an LOI on?
Mm-hmm.
And so you just have that process always going. Because if you're not inserting things into that process, that it's going to dry up quick.
Are you all broker relations as far as deal flow goes? Do you have any other sourcing?
It's mostly broker relations. And I'll be honest, I'm not the guy who's schmoozing with the brokers all the time, but I am on a lot of lists. So, I kind of do it that way.
Do you leverage someone else to schmooze, or do you just not feel like you found you haven't needed it as much? Mostly because we've been partnering with other people who have deals already. Yeah. But that's kind of a double-edged sword, right? Because then it gets you away from finding your own deals, which is what we want to get back to. So we're definitely trying to cultivate those relationships more so that we can be, the team that gets the deal and partners with others. Yep. Nice. Awesome stuff. On that, I think we'll leave it right there, Tim. This has just been just a wealth of takeaways and value bombs and all that, all that stuff. Really appreciate you being so candid and kind of an open book with us, and in terms of showing us your playbook and, kind of helping us understand how, you got to where you are. And your progression was impressive, man. I mean, it was like 17. When did you buy the duplex? What year?
The duplex I bought in 2014.
So 14. And then, kind of started to build from there, and then boom, like within, what was it, 4 or 5 years, you're an apartment tycoon.
Yeah. I would hesitate to call myself a tycoon, but it does escalate quickly. Michael Blank talks about that law of the first deal, and there's some legitimacy to that.
There's a lot of legitimacy to the law of the first deal. And really, for listeners, that's all about the hardest deal you'll ever do is the first deal. It's the most important deal you'll ever do. And you get it done and things start going better for you. Things just become easier. Deals start coming to you more readily, money, lenders, et cetera. So the first one feels like pushing a big boulder up a mountain sometimes. And so, but the moral of the story is do what it takes to get it done. Take Tim's example of not needing a huge slice of the pie, right? At that point in his career, it was more important to get the deal done, to get that track record going and experience and network and everything else. So your first deal, you're not being greedy. You're just getting the deal done. And at all costs, really. So good stuff, my friend. Love this. Thank you so much.
Hey, thanks for having me, Tate. I really had a good time.
Yeah, me too. And listeners, hope you guys enjoyed this as well. And if you did, we love a rating and review in the Apple Podcasts or Spotify's or wherever you're listening from. And we love to hear from you. I threw out my email address earlier, tate@glequitygroup.com. I've got a great conference list to send you guys if you want to kind of know what the key conferences I think are to go to. I've got some other stuff I can send you to. So on that, we will see you all in the next episode. Take care, everybody.
This has been the Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of the Apartment Gurus.